Hi everyone, this is StockJanitor. Welcome to my Value Digger series. Today I'll be talking about these topics. So first of all, penny stocks. I don't talk about penny stocks just because they're really risky, and for average investors, if they get into it, they might purchase at a unreasonable price, and the stock just doesn't grow at all, and they will end up losing a lot of money and yeah, it's just too risky and I don't want to share any thoughts of it. I play it myself. I do talk about it in my Discord channel sometimes, just to with my friends and partners. Yep. So next, uh, I'm gonna talk about some old stocks and some new stocks and dividend stocks. So old stocks, let's talk about Root. I realized in last year, 2020, December, I realized that Root has a price gap with Lemonade. Lemonade right now is about $150, and you know, Root right now is $17. So the financial for Root is four times better than Lemonade, and the stock didn't go up a lot. So I do think there is a value gap. And let's look at the charts. So when I built my position, it was around 15 bucks. And I know some of my subscribers has made some money from these two rises. So they sold around here and then bought again, sold again. And recently it's just not performing. It's still dropping. And well, from previous rises, I also made a lot of money. Um, I also added more position around here. Uh, Although it's dropping, I'm adding more positions slowly. Please be aware that I always use dollar cost averaging method to build my positions. So I'll always have uh, a chunk of cash to get ready and stuff like that. Mm, I'm just sharing my actions are. So if you want to buy roots, it's really at your own risk. Yeah, but personally, I really like this company. They use driving telematics technology from iPhones to give you quotation. I also learned that California restricts this method to provide premium for consumers. So basically, uh, the route telematics doesn't work with California. It's kind of interesting, and all other states they uses it. It's weird, but whatever. From the chart, it just keep dropping. MACD is pretty low, and RSI is kind of low. So technically speaking, chart technicality for our chart looks a good entry point. But I also want to point out that from weekly, it doesn't look so good. Wait, where is it? Okay, from weekly, the RSI is not at the lowest points. Also MACD is ending up with green bar and maybe start up with the red bars. So it looks like it might gap down more and then come as a reversal. But you never know, right? Maybe after earnings it just flies up. So, yep. So my expectation is if it drops, I'm gonna build more position for myself. If it rises, I'll stop adding, and if it hits my target price of 30, I will start dumping some. Okay, let's talk about RKT. RKT is a company I talked about in my previous video. Because the market cap for RKT is fairly large, 50 billion, I feel like the volatility will be slow. After my previous video, I just sold it. I ended up with, I think, 47% gain. Uh, I was I purchased it. I forgot around here or something. My it was some leap contracts. So yeah, and I cleared all my position in here. But in the future, I kind of like this company because it's online mortgage, and I tried their product. It looks pretty cool. I might build some position for long-term hold later on, but as of right now, I don't have anything. Also, I want to talk about Shift. In my previous video, I said that I found another company called True Car, so I sold all my position right away and switched it to True. Unfortunately, it kind of gapped up, so I missed the profit chance, but it's okay because in my personal opinion, True is more of a solid company comparing to Shift, and because True has a lot more experience in this field, and they also have some uh, technology divisions that's better than Shift. And as you all know, this is a huge competitive market for secondary car brokerages. Next topic is the new stocks I found. I want to talk about these. These are pretty big life-changing technologies. Let's talk about Open Door. So what is Open Door? Open Door is basically a real estate company. It's kind of like Shift, where it's a phone app. All you have to do is put your house information in, and then you want to sell it. They will give you a appraisal. They will give you a price offer, and then if you accept it, they fund you cash within 3 days. So basically, you can close your escrow almost in just a couple days. Uh, it's really fast, it's really convenient, and the sellers will uh, negate the risk of waiting for a buyer getting the loan. And if the buyer, loan doesn't get approved, it fell out of escrow. And I made some research. What Open Door offers is fairly is a pretty fair price, market price, and then the proceeds you get from Open Door it actually exceeds what you get from traditional selling. So they kind of cut the broker agents out, and how they profit is really interesting. To me, they're a mortgage company. Uh, their business model is based on providing loans to home buyers, and also they earn subsidiary income from like title, escrow, or other expenses. And their brokering fee is pretty low, so they're comparing to traditional. So this will change how the whole real estate industry work in the future by a lot. And I made some research. The brokers are pretty fearful for this happening. And in the past couple weeks, Zillow has announced that they will become, a broker for real estate also. So Open Door does have a lot of competition, but the reason why I like it over Zillow is because the market cap is pretty low, and they focuses on the technology instead of Zillow takes a longer time to turn over their position in this market. But it also has its downs because Zillow has a lot more experience, a lot more capital. The market cap is, I think, 40, 50 billion. So almost 10 times more capital than Open Door. And Open Door do need money to acquire these houses. Also, for buyers, I didn't talk about that. For buyers, so after Open Door acquires the house, they sell it to the buyers, and buyer can buy directly from Open Door. This way, the transaction will minimize all broker costs, and Open Door, is almost really low margin of profit from commissions. Uh, yeah, their business model is really interesting. I really liked it. When I learned about this company, it was around 26 or 27 bucks. So I kind of built position around here, and then right away it just gapped up. I didn't have time to do a video, and right now I'm in Salt Lake City, outside traveling. That's why I posted a bit late. But this is a good company. You might want to watch out for. Also, the next one, Hims. This is a really interesting company comparing to others. I like this a lot, actually. Let's talk about this. It has two main websites. One is for Hims, one is for hers. And they sell health products. So for acne and hairs, depression, birth control for women. They target. I feel like they target main products, main problems in the in for individuals, and for him, also similar functionings too, also condoms too. Anyways, what they do, they're what they're trying to do is they want to do online, medical consultation. So they're kind of like teledoc, and they do online, medical consultation, and then they have a subscription business model, and so they offer a variety, and also they have consumer products, which I love because they can use this solid consumer product, business to support their technology in the future. So their growth rate will be steady, and their cash will have a lot of you know support from these consumer products. Mm. Yep, and that's for him and hers. What's next? Let's take a look. Okay, HPP. I love this company, and recently I learned that from December they tried to acquire a building in Seattle or Portland. I forgot where, but it closed recently, and one of the anchor tenant is Amazon. So this is a pretty good news to me, at least. And yeah, I've been adding positions from time to time, and I really like this company because it's a Class A building real estate company, and yeah, I'm just adding position. Oh yeah, and for Open, I forgot if I shared my play with Open. So I purchased around here. It gapped up. I sold some, but I kept some. In the long run, I feel like it's gonna hit some higher price. So I'm waiting for my target price, and then I will dump it all. But as for long-term hold, I'll think about it. I haven't decided yet, so I'll see what my thoughts are later on. And for Hims, I learned about this company around this price range. I feel like it's kind of high, and the uh, indices are pretty high, so I just didn't add position, and you know, fortunately it dropped. I still don't have any position, but I will be hunting for this in the next few weeks, I guess. HPP, I've been adding position daily, weekly, actively. Let's just say that. And from previous video, I suddenly added Verizon to the long-term dividend stock list because of the price drop. And this week, there a really good news I believe it's that Warren Buffett started to purchase Verizon, so it's a good news. I'm a Warren Buffett fan, and he taught me almost all my knowledge, and yeah, he changed my life, and yeah, this is a good indicator. After he purchased, I added some position also. Also, I recommend. Well, I didn't recommend. I said that T-Mobile and IBM are pretty good dividend stocks, and yeah, but since I have HPP and Verizon, I won't be focusing on them as much unless Verizon and HPP raise the higher price level and they stay the same. So then I will think about adding T and IBM. I think that's it for this time's Value Digger series. Thank you for watching, and remember to click the subscribe button. Thank you.